I published a new blog post last Friday, May 29th, discussing some of my recent trades. A link to my blog post can be found in my profile section here at YouTube. I remain in a light liquidation mode for my stock allocation and will continue a weekly net reduction for as long as the stock market rally continues. I am increasing my investment grade corporate bond allocation, focusing on maturities primarily in the June 2027 to December 2028 timeframe, with some purchases of maturities in 2029. I'm buying about 15 to 20 $1,000 par value corporate bonds each week as I build out my bond ladder in those years. I'm concerned about the recent all-time low in U.S. consumer sentiment and how that will impact consumer spending going forward. I'm also concerned about the persistent rise in inflation and how that impacts consumer spending as well. And that is rising due to a variety of factors, including the Republican tariff taxes on U.S. importers, the war against Iran and the closure of the Strait of Hormuz, and massive deportations of illegal, unlawful immigrants, negatively impacting the supply chain in key sectors, including agriculture. The government's April personal income and outlays report reinforced those concerns that I have. This monthly report has important data on personal consumption expenditures, which I will abbreviate to PCE, PCE inflation, real PCE spending, and real disposable income, and the personal savings rate. Real simply means adjusted for inflation. 12-month core PCE inflation was reported at 3.3% through April, and that's up from 3.2% through March. The 12-month PCE inflation was reported at 3.8%, up from 3.5% through March. And some of these other numbers I think may even be more important. Real PCE rose only 0.1% month to month. Real disposable income was down 0.5% month to month. And the personal savings rate declined to just 2.6%, down from 3.2% in March and 5.8% in April of 2025. Those numbers reflect that consumers are dipping into their savings to fund spending, and their disposable income is actually going down with inflation. While AI spending will juice GDP this year, and investors are focused almost exclusively on that impact, and in 2027 as well, consumer spending, which generates about 68 to 70% of GDP, is starting to crack as real disposable income declines, consumer sentiment tanks, job and wage growth stalls, and what is being done in Washington is only making it worse, not better. This is occurring as the S&P 500 hits new all-time highs, based in large part on a 100% certainty that's baked in the stock prices that the factors causing all the problems I just outlined will soon go away. The probability of that happening is not anywhere near 100%, in my opinion. Near-term inflation pressures will depend on how soon the Strait of Hormuz will open. The price spikes associated with that closure go far beyond crude oil prices and derivative products like gasoline, and include prices for fertilizer, helium, and aluminum. So the strait will be open soon, or it will not be open soon. If it is not, there will be a massive spike in crude oil prices within a matter of weeks, according to several experts, as the excess inventories are used and the current supply is inadequate to meet world demand. And Exxon senior vice president made this statement last week, quote, "We are approaching unheard of inventory levels. I mean, really, really low levels. You can't debate whether that's going to hit those really low levels in 2 weeks or 3 weeks. Once you get to that point, then you'll see prices shoot up," end of quote. Trump has promised repeatedly over the past 6 to 8 weeks that the strait will be open soon and Iran will capitulate to U.S. demands, since the regime in Iran is, in Trump's words, begging for a deal and desperate for one. That may be true, but I am not seeing any concrete and reliable evidence that is the case. I do not accept Trump's characterization as true, and I assume that they're false or at best misleading until I have reliable evidence that he is making an accurate statement. Representations made by both Trump and his administration and Iran, as well as anonymous sources from mediators, are simply not worthy of belief. What I am reading are different versions and interpretations of a Memorandum of Understanding, MOU, that's been circulating, which is nothing more than a framework for negotiation anyways. Iran and the U.S. do not even appear to be on the same page. Iran news agencies declared that the U.S. has agreed to release $12 billion in Iranian funds that had been seized in response to sanctions prior to the and that Iran is claiming that those funds need to be returned to it prior to any nuclear negotiations even starting. The U.S. denies that claim, asserting that the release of some funds is contingent on signing a final nuclear deal. How could Trump release $12 billion of seized Iranian assets as a precondition to nuclear negotiations when he has harshly criticized multiple times in the past Obama for releasing far less, claiming that Iran would use those funds to support terror and to buy weapons? As to reopening the strait, Iran is claiming that, quote, unrestricted access, which is apparently a term in the MOU, to the strait does not prohibit it from charging fees, which the U.S. Disputes. When two sides to a deal cannot agree on what the terms mean, there is no deal unless the ambiguity is resolved by clear language. Otherwise, finger pointing about violations will soon start before the ink is even dry on the MOU. Trump claims that Iran has agreed that it will not develop a nuclear weapon and claims this is some kind of achievement that he has secured. Iran always claims that it is not going to develop a nuclear weapon. As far as I can remember, they've been making that claim. The issue is not whether they're making that claim now, which is not new, but how intrusive will be the inspections to determine that they are not developing a nuclear weapon, and how long will they last. Another issue is Russian drones landing in Romania. Last Friday, a Russian drone slammed into an apartment building in Romania. Rather than apologizing for the attack and offering to pay for the damages, a Russian official warned NATO that its member countries can expect more incidents of this kind. There is concern that the war in Ukraine, which is now in its fourth year and started in February 2022, will spill into a wider conflict, possibly in response to more, quote, inadvertent Russian attacks on NATO countries, or Putin becoming even more desperate in his attacks on Ukraine that result in massive civilian casualties that can no longer be ignored by the Western democracies. So I am focused on simply generating a constant flow of income primarily from treasury bills and corporate bonds. I can buy corporate bonds for better yields than I can secure from treasuries. and I do not have to be concerned about the how the yield is affected after a state income tax, since I live in Tennessee that does not have a state income